Today's inflation headline number of the Consumer Price Index, or CPI, was much higher than I expected. I guess that they're going to have to keep changing the formulas to hide even more inflation. If you want to see more details about the price increases for inflation, I put screenshots from some leading economists and money managers there on your screen on the left-hand side, going into more detail. But the bottom line is that in terms of some of the CPI numbers, this was the highest print in 13 years. For other parts of the CPI, this was the highest since 1982. Depending upon how you look at it, this was either a 13-year high since 2008 or another high since 1982, when Paul Volcker started to massively increase interest rates to try to fight inflation, and stagflation was killing the US economy. However, there is no Paul Volcker, and raising interest rates even a little bit with the amount of leverage in the global financial system with governments and corporations, even a quarter-point rate hike with the amount of leverage in the system could cause another stock market crash in the not-too-distant future. But what is most concerning is beneath the surface and what the Consumer Price Index is not saying, and that is shrinkflation. I've been talking about shrinkflation for a very long time. On my last George Gammon interview, I mentioned it a lot, going into detail about how it was going to get a lot worse, and we're starting to see a lot of real-world examples of food and consumer getting killed with shrinkflation. Now, this is where the prices might not increase at all or only go up a little bit, but the amount of goods and services that you are getting for your dollars or euros or British pounds is decreasing a lot. The amount of shrinkflation that has increased is double digits on many food and consumer items. So some of these items you're seeing 10% increases or more. A lot of food and consumer items, you're seeing a decrease in portion size between 10% and 40% recently. If you want to check more of this out, there's the Costco article from Zero Hedge I have on the screenshot there, but there's also about 3 or 4 other articles cited within that Costco article if you want to read this more in depth of other examples of shrinkflation. So the bottom line is that it is getting tougher and tougher for the Consumer Price Index to hide with the trillions in new currency and credit units that have been created globally, and the real economy is not producing as many goods. There's supply chain problems and other problems. So you have all this currency and credit chasing asset prices, chasing commodities, chasing food prices, and that's why you have worse stagflation and shrinkflation. And these governments using a stagflate tax-like strategy are going to have to keep changing the inflation formulas, the Consumer Price Index, to hide inflation more and more and more. So overall, I was surprised that the headline inflation number was as high as it was, but the real inflation rate, if you were to account for shrinkflation and real inflation, is much, much higher. John Williams of Shadow Stats and the Chapwood Inflation Index that Ed Butowski runs are far more accurate than the Consumer Price Index. The Consumer Price Index is economic propaganda. It is phony. And the fact that it showed over a 4% headline number means that they're going to have to change the number in the not too distant future, because here in the US, cost of living adjustments are tied to the CPI. So government employee pension plans, social security checks, all these things are tied to the CPI going up, which means there's going to be cost of living adjustments. And that's a big no-no for a government that's already running budget deficits of over $4 trillion. They do not want to have to pay out larger and larger social transfer payments, because that means even more monetization of debt that the Fed is going to have to do. The Fed and US Treasury are probably creating so many special purpose vehicles Monday through Friday off balance sheet that it is insane to hide the Fed's balance sheet growth and how many US Treasuries are being monetized with newly created currency units. Finally, if you like this content and want more, or just want to chip in to keep this content free, because it takes a lot of work to make storyboards like this, find articles and screenshots, and make interesting content so often, please chip in $5 a month to my Patreon. There is over 150 articles, charts, and audio podcasts behind the paywall on many interesting topics about investing in the economy, covering different companies and different sectors, including 5 new articles in the last 2.5 weeks. So I think it's one of the best deals out there for only $5 a month for the research, analysis, and education.